Good morning, guys. Welcome to this Thursday, January 29th. Couple of more trading days of January, and then we are going to be in February starting next week. So yesterday we had a big day. It was Fed came out, they didn't raise the rate, same as left it as before, zero change. Then we had the announcement, the press conference. Powell managed not to step in it and create a big sell-off. He didn't make a big rally out of it either, but usually he creates a sell-off. So that didn't happen. That was a good sign. And then you had the big tech earnings come out. You have Tesla, Microsoft, and Meta report. Now I'm watching. I was watching that they came out. Oh man, both Meta and Microsoft both down like $30. It was looked crazy, and I was like, oh god, this is not going to be good. And then after a while, little like then they had this massive rally afterwards. It was like Meta rallied. Microsoft didn't do much, but Meta rallied big time. You can see the Nasdaq recover and trade right back up again. And then you'll see that here. You see that. Let me split that out. If I split out P period from yesterday, so this is the earnings announcement right there. Come on, split. There it is. That took longer than it should. Anyway, so you see how the initial reaction was to the downside. It started heading lower. I was like, oh man, this is so good. But yeah, both Meta and Microsoft down like $30. And then they started this rally started, and they grounded all the way back up to the highs again and then stalled up here. So that was a pretty impressive move to the upside for the Nasdaq and the ES. And it was pretty darn uh, exciting to watch. I was almost chasing. I didn't realize it until a little bit later after it kind of happened. So I just wasn't going to trade it anyway. But I looked at the chart, I was like, man, this is very tradable. So but it just after the market, I was like, no, but I was super tempted. That was a missed opportunity because that could have been a nice run here. After that, you can see after that initial reaction when they started grinding back and the grind started, that was like a non-stop grind right back up again. Definitely tradable, and but you had to just watch it and be prepared to trade after market if you wanted to get on that any of that. But then on the overnight now we've been down here, we've been back up again, so going back and forth in normal rotations, I think. Big question mark for today is really how we're going to digest the Fed announcement, the Fed news, and these tech earnings. So Tesla came out too. They're up a little bit, $8 right now. So that was a decent earnings report, I guess. And the forecast for what they're going to do seems to be taken positively. Microsoft is the one right now dragging things down. Not a great sign at all. So that's how we get started. And now we do have more earnings come out after the close. We have Apple earnings come out. It could be some other stuff coming out. So it could be a little bit crazy out after the close today as well. So that's I think the theme going into for today. We do have a little bit of news coming out. At 8:30 we get jobless claims, international trade, productivity. All comes out at 8:30. 10 o'clock we get factory orders. And then we have a 7-year auction at 1. So a little bit of news coming out as well in the morning. And now I would just start off range bound. I'm going to watch this really carefully. Range bound, I would keep a slight bias to the upside and see if how these tech earnings are going to be playing in the market here. If the Microsoft earnings going to be disappointing or disappointing enough to drag the market down, or if the Meta earnings is going to emphasize like the AI trade is alive and well, and the execution matters. It always matters, but it's if the AI trade gets some doubt on it, then that could certainly be an issue in terms of the bigger market and where it's heading. But right now, it's a kind of a mixed bag. It's not like all of them they blew it out of the park. So one up, one down, and one kind of meandering a bit. So starting off range bound, slight bias to the upside. Let's see how the market feels about the whole thing. And I will key in on these lower support areas now, same as yesterday. So the 69, the 69 90s or 85s. Let's say 85s. And if that starts coming out, the session lows and then the 69.70s, these two support areas come out, I would be back on the short side looking for rotation down. I think if they back up more than that, I think that could be a sign that they're going to be have a little bit of a problem on the session. Doesn't mean that they're going to start selling off. That means that they're going to probably run down here to that 69.50, maybe lower. And on the way up, if they start taking out this high at the 77,030s, yeah, we may be on our way to make new highs. So we'll see how it's going to go. It's anyone's guess right now. It's a mixed bag with the tech earnings, one up, one down, and one in the middle. Powell didn't step in it. A little bit of news coming out this morning. So overall, I think it's pretty positive. It's we have a shot at holding on to the gains and potentially taking this higher. So starting off range bound, looking to buy weakness against 7,010s, the 7,000, 69.85s, 69.75. So these areas, these two support areas, the 85s and the 75s. Below that, I'm going to be taking off any long bias, going back range bound, maybe even on the short side. Looking for rotations down to the 69.50, maybe even lower. On the way up, looking for short setups against that 7,030s. Could also be the 40s for rotations down. If they start taking out the 30s, though, I think it's a case to be made that we may have a move out of the middle, popping to the upside here. So that's how we get started. On the ES, and then let's see how the market's going to digest the earnings news. Now, just before I keep going, gold. As I've been mentioning gold, they popped all the way up to 55.85. This has sloppy that is. They had a pop. They popped late in the session. That was after the close. They popped $200 to the upside, and then in overnight they went another $200. This feels very much like the exhaustion trade to the upside. It's what it feels like. The gold may be finding some very volatile times ahead. But that was crazy. After the close yesterday, gold popping like that, and then overnight even worse. Man, if you be on the wrong side of that, you lose your house. That's for sure. And looking at the Nasdaq, also Nasdaq trade, even worse. You see here Nasdaq, they gapped all the way down here to the lower end of the 80 to 29, 25, 980s. I didn't put the level in there because I don't think necessarily that matters. I think the level is a little bit lower, and this was just a reaction, a news reaction. So they stalled in this kind of this high volume area, but I just left the edges as they are. But they ran down, and then Nasdaq was even more, 985s, and then all the way back up here to the 26 260s. So they were like 300 points down and 300 points up almost. And pretty crazy, but that was and that was even better in terms of tradability, in terms of how it looked. And a big reaction to the downside, hard reversal, and then it started grinding, and then it started after it took out this area, the 26,100s again, started trading back above it. That's when it just started grinding right back up again. It was pretty volatile down there. I wouldn't say that was an obvious setup, but after they start taking out this resistance area, then at the 26,100 starts trading above it. That's when it really started happening. And now we are holding in a range. So having smaller range in the middle here, they're starting taking that out a bit. I would look at these two areas again, the 26,100s and 26,030s again. If they both of them comes out, taking off the long bias and going back range bound. If they can hold above it, staying on the long side, see if they can take it higher. So initially looking to buy against this area, the 26 170s, 100s down to the 30s for rotations up. Looking for short setups against the 290s, 330s for rotations down. And they start taking out the 290s, we may have a shot at just heading higher. So I mean, it's going to be very, keep my fingers crossed that we have a good, a positive reaction here going forward, and maybe popping to the upside. If not, if they start heading lower, initially looking for those buying opportunities down here to the 26,030s. And if that comes out, taking off the long bias and going back range bound, maybe even on the short side, because getting aggressive on a short side early on here could get you into a really good trade if they keep backing off, you know. If they just stand here probing and running it down to test this low, that's the only caveat. If they run down that support area, they may run down to test that low at the 985s before they move. So, I mean, I can put a small level in there. It just, so you see mark it up so you don't forget about it like that. A little small level like that. So it's so you can see it. Otherwise, it's one of the things I wouldn't necessarily look at as an edge. It's more of an attractor area, a potential target if they run it lower. But if that happens, that would be then a quick reversal from there. But I would, if they take out that 26,030s, I would look for them to take out with a little bit of conviction, try a pullback trade, and if that doesn't work, I want to try that again because you don't want to get caught in a shitty trade. And if you do a pullback trade like that, then you don't want to be trying to repair it. You see me get caught in that sometimes. When you're down here, you're looking at the pullback trade, and then they start going hard against you, and you try to repair it and try to get back out. But it's probably better just to let it stop you out because sometimes when they run it below a support area like that, you can get a complete reversal, a V bottom, and then they just run it right higher, and they squeeze everything out, and then it doesn't matter how much you want to repair it, you'll then run it much more than your account can handle. So I keep learning that the hard way, but you just have to kind of be focused on it. When you do that pullback trade, just don't repair it too badly. Yeah, maybe once if you're going to be absolutely have to repair it, but don't build that trade up. That's just going to be a big loser. Anyway, so that's the ESN and NASDAQ. So starting off range bound, looking to buy weakness still. Watching very carefully to see what's going to happen as the market digests the earnings from yesterday and the Powell decision. Now back here, looking at the bonds real quick. And then see what the bonds are doing, I think meandering around. So a little bit to the downside. Traded back up in overnight a little bit now in the London session. Just starting range bound on that one as well. Looking to sell strength at 15s, 1510s. Looking to buy weakness, 1424, 20s, down to the 1415s there for rotations back up. So that's kind of the approach on the bonds. 3 levels up, 3 levels down. Like 2 levels up, 3 levels down. That's pretty much it. And we'll see how it develops. All right. So range bound trading on the bonds. And again, super cautious when you trade the bonds, or super patient, I should say. Do not trade it the same aggressiveness as you trade the ESN and NASDAQ. And it trades very differently. Alrighty, guys. So good trading. Leave it there. Let's see how this whole thing develops. We have news at 8:30, so in a few minutes. Let's see, that could potentially move the market around a little bit. But let's see how this whole thing shakes out. All right, guys, we'll see you back at 11:30 for the next update. So good trading, guys, and see you back then.